Alrighty, everybody, let's get this party started. It's Wednesday, June 26th. Another trading day in the books. So let's go over what the plan was from the previous night for today. The plan was to go long Dow, and that was it. And that's what I did. So let's jump in. Oh, we're already on Dow. So from last night I said, so Dow looks good right here, except for I would, starting a position from right here, I would want to be able to have a little cushion in it. In case it goes all the way down to the 50-day moving average. I don't want to be sweating bullets, So, luckily this morning, it had sold off pretty good. Kind of right to a really good area, actually. So I look on the hour chart and it had bounced right off of this moving average. Again, shorter time frames is kind of, moving averages on shorter time frames is something that I have picked up over the years of trading. These are not like, I haven't back tested them like I do for basically all of my other trading, right? So for example, I know, so 200-day moving average, 50-day moving average, 21-day moving average, these have been back tested since forever, right? So I have, so this isn't a sort of style that I've created out of nowhere, This is the one that works best for me. The one basically that Bill O'Neill had created or pioneered, right? Dude was wildly successful. Firm's still around. I love their style. So you don't need to invent the wheel with anything. That's the one I like. There's a bajillion different strategies and ways people trade and whatever. But anyways, so on a shorter time frame, these are things that I have just noticed over the years. So I saw that it bounced right here, and I got in. Somewhere around here. And yeah, because that was kind of bounced right off here. Boop. Got in. August 16 expiration. Where's the piece of paper? Nope, not in there. August 16, 390 strike price calls for $7.90. Good day for the Dow, for the most part. Not great, I just kind of as expected in a sense. I figured it would hold somewhere around this area, and it held somewhere around this area, so it's fine. Just like literally, this is a 1 minute chart, so this is just right at the close, and then dumped. So these calls traded at the close for $8.67. Like seconds prior to the close, they were significantly higher. I thought, sweet, this day's gonna end great. Nope. But no, it's still good. It's still good. Definitely profit there. And that's all that I did today in terms of any new positions added. I didn't sell anything either. So let's go over the positions that I'm currently in. Oh, and by the way, what are my thoughts on this? It's fine. It's fine. I would have been much happier if the reaction to Micron's earnings weren't a bad one. But right now it's fine, and we'll go into Micron's earnings later. So that's going to be exciting. Stay tuned. All right, current positions, emerging markets. Still okay, still fine. The percentage gain that I was at this point to a few days later here is substantially less, so that always kind of sucks, right? But I have rules, and the rules aren't around money, so it's around price level. No reason to sell this yet, and the position's not big, anyways. It's not that big, right? I have strategies on position sizing that's super important. This is a position I may add to. We'll see what happens here over the next couple days. If it kind of bounces around in here, I might add to it, because then the risk to reward gets great, right? I mean, if closer we get to the 50-day moving average, I would love to add to it, add to this position. Anyway, so I got those. August 16 expiration. That's like 50 days. Yeah, 51 days. 42 strike price. I got those for $1.30. They are now trading for $1.35. We're moving on. Let's look at this on the weekly chart. I haven't done that for a little. Yeah, fine. I think it looks better on the monthly chart. But again, this is one where it definitely has good upside potential. I'm not looking for a quick trade on this. At some point during this bull market, assuming that it continues on, money will go farther and farther out on the risk curve. So if this can get over, so with that in mind, and if this can get over 44, this has room to run. So that's what I'm looking for. And I will add and subtract from this position as it's working or not working in here, in this whole area here. So moving on. Goldman Sachs, we're still in this. This is the one that I was the most excited about a couple days ago when I started the position, like right there. 459. Still a starter position. If this kind of finds support and moves up, I will be adding to this. But not right now. Although this could be a good place. But anyways, this one I'll take below the 50-day moving average. So we got room to work on this one. Robinhood. This is a cool one, interesting one. So this one opened up a couple percentage points higher today. Nice gap up in the morning, and continued strength as well this morning. So it gapped up, nice, continued strength, boom, and then just got blasted. I think a lot of that had to do with Bitcoin today, because kind of same thing. Yeah. What's this? This is the morning. So, sold off during the day. Everything's fine. Nothing, no sell rules broken. Those calls, $4.08. 87 days to expiration. and the strike price is $20 strike price, so that's 10% in the money and 87 days. So not worried at all. $4.08. Those are currently closed today at $4.20. So that's automatically bullish. Oh, I have an equity position in there as well. $22.07 is the average cost. Again, that was just a starter position. I just started this one yesterday, I think. So yeah, still looks good to me. Oh, this is another one where if this can get going, I mean, this has a lot of potential. I mean, look at this base. I talked about this as to why I got in yesterday for a decent amount of time. But yeah, I mean, this base, huge base. Revenue is increasing. And plenty of room to run. The only thing of concern is maybe Bitcoin. The price of Bitcoin, if that continues to go down, that's going to hamper on this stock. But even with the price of Bitcoin going down pretty substantially over the last month or something like that, this has still acted well. So, it's worth a shot, right? And if something fits my style, just because I see one negative or one reason not to trade. I mean, you could find a bajillion reasons for or against something. I mean, this fits my my strategy, my trading strategy, and so I go for it. L3 Harris. Moving on to L3 Harris, defense contractor. Still fine, equity position in this, not a starter position, decent size position. I spent a couple days adding to this as it was working. Average cost in this is $219.21. Still looks fine. The weakness during the day over the last couple of days have been bought. Now, the one thing that I will say is I've started to see some narrative shift on like the war in Gaza, where Benjamin Netanyahu had said that their objective in Gaza is almost done, or something to that effect. Whether or not the conflict with Israel and the Middle East, other countries, escalates or not is still to be seen. But so you have Netanyahu saying that, and then you also have Trump saying if or when he's elected, Ukraine doesn't get any more money for military stuff unless they start talking peace with Russia. So you're starting to see a little bit of a narrative shift from unjustified attacks, and we're gonna send everything that we've got for Israel, and they have every right to do whatever they want, and unlimited money, so you're starting to see a little bit of a narrative shift there. So these are things that I think about in the back of my mind. But no sell rules have been broken. Like I said, those are things I just kind of compartmentalize in individual trades and or just themes in general. So now I'll go over to Palantir. Palantir starter position, haven't added to it. $24.23 equity. $24.10 now. No big deal. We'll see if I can get a Palantir trade right. These kind of jagged, choppy patterns don't really, because this one, clearly does not fit my style. Below 50-day moving averages, I'm usually out. I mean, I would have missed this entire thing. But turns out that was a good place to buy, right? You know, this happened a couple times. Also happened, you know, here. It's very jagged. Doesn't really make any sense to me. Gap ups, gap downs, gap up. Very jagged. But regardless, it isn't an uptrend. This thing could have some serious rocket power if it gets going. I like the CEO as well. So this one's worth a shot, right? I mean, it still meets my criteria, so it's worth a shot. But it's just a starter position in this one. So as it works or whatever, I'll add to it. If it doesn't work, it's no big deal. Position sizing, super important. Okay, over to NASDAQ. Let's just talk about the wheat position and get the most boring one out of the way. So, man, strong day, right? And then completely sold. Pretty close to cutting this one. We had said below 550, or was it below 555? That would cut a third of the position. Below 555. And we haven't been below there. So I'm still in everything. But this is the smallest position in the portfolio. And price is not working as expected. So I will continue to give this time. I like to give my positions every single opportunity I can for them to work. And do my absolute best to not let my feelings dictate it, you know. So, but again, I've developed kind of a rule, whereas if price is not acting as I suspect, and we're talking like pretty substantially, right? I mean, just I don't really set hard expectations. But anyways, this is certainly has not acted as I would expect. So typically in that scenario, I usually will get out and move on. No need to have capital kind of tied up in things that aren't working or not going your way. There's 10,000 other opportunities out there, right? You know, and then just hoping, you know, turn around. And it's the smallest position anyway, so it doesn't really matter. So anyways, we'll give this another couple days. Yeah, we'll give this some time. Because that's the other thing that's funny in trading, right? It's like, just when you're at your wit's end, it's like, boom, goes exactly how you think and way better, you know? So again, that's why I love to give positions as much time as possible, right? Because, I mean, the unexpected happens all the time. So now we'll go over to NASDAQ. I'm still in this. Last night I had said the 20,000 mark was of concern. And in fact, it was sold off of there. Why did I think this was of concern? Because clearly that would be resistance here. Acted as support. You know, bunch of times we're on a 4-hour chart. Acted as support. Boom, boom, boom. Sold off below it. I got in here. And so yeah, I broke support right here. So obviously that's going to be resistance. And this is on a shorter time frame. This is not a longer time frame. I mean, we're looking at a 4-hour chart here. So yeah. Still in this. We'll talk about Micron later. Still in this. Got calls at $6. These are currently $6.60. I didn't write down how these closed today. Yesterday was $6.70 was the close. $6.60, I believe. Could be off by a little bit. Somewhere around $6.60 is what they closed at. $6.55, $6.50, $6.60. Again, right before the close, it was nice, strong price action, really strong. And then minute to go, it got sold off really hard. So, it was a big sell off. So the price of those options contracts did drop pretty substantially in that minute or so. And then we'll talk about Micron's earnings later. In terms of my plans on getting out of here, that's something I need to figure out exactly. So that'll be in the plan for tomorrow, where we can figure that one out. But still a good cushion in there. Cool. That's all those positions I'm currently in. Yeah, those are all the ones I'm currently in. Okay, cool, awesome. All right, let's go to futures. Another boring day of futures trading. First trade was placed at 7:35 this morning in Dow. 7:35 at 71. The heck is this? 7:35 at 71. So in here somewhere. 71. Okay. Yeah, right here. Sold 74. Boop, boop. 3 ticks, $15 a contract. Nothing to write home about. You had weakness in every single index except Dow. So I was not inclined to hold these contracts. Clearly, this would have worked out just fine. It would have been spectacular. But over the years of developing a futures strategy, and I'm still don't have a strategy I'm 100% confident in. I'm still trying to formulate one. But one thing that I do know for sure is when you have a day that is a non-trend day, I would call it, holding contracts can be disastrous. You get chopped in and out to death. So I take what I can get on days like this. Don't place too many trades. $15 a contract. Right? I mean, since I started these videos, that's basically the trades I've been doing since, I've started this Monday, Tuesday, Wednesday, 3 days of the same thing, right? But all those, they do add up. Again, I don't know if this is a good strategy. This is literally, I've been doing this strategy since July, where I'm taking what's given, and then on a trend day, I'll let it rock. And sometimes I will miss those trend days, right? But it's better than blowing up, So again, this has been working. Is it perfect? Not even close. But I will do everything that I can to get there, make it perfect. So enough ranting. Let's move on to the next futures trade, which is kind of more of the same. NASDAQ. 9:20 this morning. And again, these are Pacific Coast times. Ah, yes. So this one, was 2 ticks. I was at 2025 or 20,000, 20, so 0.25 right here, 2 ticks, boop. 0.25 to 0.75, 2 ticks, that's $10 contract. Went for it again, and right at 9:30, and thought, you know what, let's go for this again. And 0.425. Yeah, so look at this. 0.425 right here. Sold 3 ticks higher to 0.5. I mean, and then bam, drops. So again, I've I've been in this situation a bajillion times. So where there's, there's really no reason to sell where I did. I'll go through why I did in a second, but but kind of generally speaking, you're thinking, why would you just kind of get out right away? So we'll go through that, and it turns out I'm glad I did. Right? I'm more of the conservative trader where my main focus is risk. Number one is risk. So I'm much happier being conservative and missing out on home runs than getting some home runs and having huge volatility. So why was I gonna get out of these so quick? Because it wasn't the perfect setup. That's something with futures where I've developed, and again, it's not perfect by any means, not even close. Okay, but on days like these, where it's kind of not much up, it's not a strong trend day in one direction or the other, holding a contract, I've gotten absolutely crushed. So that's what this day was, and I wasn't gonna hold those. I just wasn't gonna hold them. Not to mention, you had weird price action right around this 20,000 where I had said last night was of concern. Price kind of rolling over, acting funky, not as expected. So that is why I got out there, and in this particular case, it worked. Again, could you say, well, is it worth it to take the trade? Probably not. Probably not, but I'm not perfect in it. Profitable, but again, it's not about, the name of the game is to trade your plan, to have a strategy, and to not work and to not make mistakes, and the money will follow. It comes as a result of that. So, is that a mistake to have made those? I would say so. But then I'm in the conundrum of, these are very similar to what I have been doing this whole month, my new kind of future strategy where, like I was just saying, so where you get these weird choppy days, I'll take a few ticks a couple times during the day, right? Like 3 trades, 4 trades, 3 trades of a couple ticks. Um, and that does add up. And then on a trend day, then hold the contracts for for the potential of a larger gain. And then I'm much looser in terms of where the stop loss would be. So that has worked this month. We'll continue that into next month and see what happens. Who knows? Could be onto something. Maybe it's absolutely ridiculous, but we will find out together. Last futures trade that was placed, and this is an interesting one. Russell 2000. So as the price was kind of rolling over, I had noticed throughout the afternoon rolling over. I'm like, all right, I need to look for a short position here, and let's pick the weakest index. Russell 2000 was the weakest one. So right around here, I have this written down for you guys so I can remember all these things. At noon Pacific time. Oh, yeah, right around here. 34.7. So right here, 34.7. Bang. Price is gone. Ding, ding, ding. Drops. Gets fully supported. And then I give it some more time here. And I see it get fully supported. Give it as much time as I was willing. And I get out for a single tick gain, which equals $5 a contract, but given fees, it's essentially zero. It's like $2. Something. Yeah, it's basically zero. It doesn't even matter. Unless it's like a million contracts. Okay. So those won't even be able to get filled. And then look what happened. I mean, price goes up. So again, it's like, I don't really, it's acting funky. So I get out, and yeah, I mean, I could have gotten a couple ticks better, but I mean, it's just, again, capital preservation is my number one. That's my number one thing. That's what I care about. And boom, I would have gotten wrecked. I mean, I would have closed the position out and missed this whole thing, but still, so again, work there. Is it a perfect strategy? I have no clue. Again, this is not some strategy anybody's taught me or anything like that. I mean, this is through blood, sweat, and tears of a year or two trading futures, 2 years, but a year and a half of like really, really honing in on futures trading. I've had my stock trading and options trading strategy for many years. That's worked wonderfully. But futures trading, I'm figuring this sucker out. So we'll get there. It'll be sweet. It's gonna be epic, and we will get there. Basically, what I think my strategy is for futures is take the little gains as you can, and then on a trend day, just hold it. Again, it's a lot easier said than done for me, just holding it. But I've had some success doing that. I have, in fact, been able to hold it for a little bit. So, all right, let's just moving on. Jeez, man, this Russell 2000, it looks like poo-poo. We'll discuss that later. Moving on. Okay, so we did what the plan was and how I executed it for the day. New trades placed, current holdings, futures trading. Oh, now we're on to a really cool section. The capitulation and elation. So let's start with capitulation. Micron. I had earnings. Micron. Oh, let's spell that thing out. I looked at this chart last night, and this was of major concern. I mean, that is wicked reversal. Nasty. Nasty. Lots of money dumping. 2 days in a row, in fact. So I was concerned about that, but still uptrending. We're in a bull market. My motto is during bull markets, everything you get surprised to the upside. During bear markets, you get surprises to the downside. So I had no position in this other than exposure with indexes and stocks, but not in Micron. But you know this is going to be a very important earnings, and earnings came in, beat on everything. Revenue, EPS, beat on everything. And so then I see the numbers coming out. This thing's tanking. I'm like, oh, that's fantastic. Absolutely tanking. So this thing's down, what is this, 8%? 140, 130. Yeah, something like that. After hours, 6%, 8%, somewhere around there. That's pretty big. However, the options market was pricing in a 12% move, I think. So sucks for anybody holding options if it's not going to hit that. It's that 12% move. So I guess less movement than the options market was pricing in, but still a large move down. So I'm thinking, how the heck is this thing that bad? Why is the reaction so bad? It's got to be, outlook or something, right? So I was listening to the earnings call, and lost cell service bad signal. Like halfway through the call, right as they were getting to the questions part, which really pisses me off because that's the only part that I really find interesting. I mean, so it's outlook and the questions is what I find interesting, and especially with tech stocks during earnings calls, especially Tesla. That is very entertaining to listen to the questions Q&A portion, especially when Elon's on there. Yeah, it's freaking hilarious. But yeah, so why do I find listening to the Q&A part of this interesting, especially with tech stocks? Because with Micron, it's like, what does Micron do? What do they do? They're in technology, but what do? They make what, like a switch? Like if somebody asked me, like, what does Micron make? Well, they make computer stuff, but what? Well, they make like little switchboards that tells the computer do this or that, right? I think of like an old the switchboard operator, right? It's like operator, turning on and off a switchboard, relays, right? So it's like, what does Micron do? They make switchboards that are this big, and the operator is microscopic. I mean, clearly that's not exactly what they do, but it's like, what do? They make stuff for computers, for what? Data centers, AI, right? So anyways, my whole point being is that listening to the Q&A, you can get like a good sense of what they do, right? Because I don't work in technology. I use technology, clearly, but I don't know how this crap works, right? So it's really cool to listen to that, and then plus I get all sorts of really cool ideas of investing, and so I really enjoy listening to Q&A, especially in tech stocks. So that was my rant on this. Oh, so why the heck are they tanking like this when I thought the earnings were good? Well, the common theme that I was hearing was revenue is great, profit's freaking great, outlook is like, revenues came in right above outlook and blah, blah, freaking blah. But the one theme that I kept hearing is demand, was in like deliveries, they were saying, you know, it was kind of flat, down 1%, kind of flat. But prices increased by 20%, right? So that's why you see a really big beat on their earnings, is because the price of their product increased substantially. It's not necessarily that the demand increased, it was the price of it increased. And again, I didn't listen to all of it, but that's the theme that I got. So it's like, dang, you know, is that it for demand for AI? You know? Anyways, I'm thinking through of, you know, how is this thing selling off so hard? It's because their demand didn't exceed expectations, right? I mean, didn't even sound that good. And again, I didn't listen to the whole thing. I haven't even read anything about it. So, but anyways, that was the common theme that I heard. Demand was whatever. So that goes in the capitulation section. And that's going to be a bummer tomorrow for stocks. I think, though, the reaction is overblown to Micron. But again, having a trading plan on the fact of I perceive something to be overdone is stupid as hell, because what if I'm the only one in the world that thinks like that? You know? I mean, do I have enough money to move the market? No. Like, not even close. So, do I know what everybody else is thinking? No, I have no clue. So I'm not going to base it, my trading plan based upon how I perceive the reaction of the collective people around the world. So, anyways, but with that being said, I could see future markets opening lower and recovering. So I could see that. So we can go over the trading plan for tomorrow later in the section, later in the video, depending on how long I make this one. I have no clue when I started it. I should really start doing like timers, because it's kind of ridiculous. So now we're moving on to elation. That was capitulation. Now let's move on to elation. This is going to be another fun one. Amazon. I was in Amazon on right here, Friday. Yep, this was Friday. And this was Friday. And my plan was, as you guys know, that was the first video I did, was to sell. I had an alert set for 189, and I was going to get out. Why? Because markets were at extreme highs. How do I measure that? I measure that like this with the RSI. Again, are these perfect measurements? No, but this is a game of probabilities. So it's like, oh, it's bullshit. Oh, it's just a game of probabilities, you know. More often than not, that's all I care about. So anyways, we were way up here. Way extreme. I think that's the most extreme overbought this entire year. Yeah. Yeah. Like in like many years. By a little bit, but still. So anyways, I figured strength would be sold. So I had a plan of 189, this set the target, and I was going to get out. And I had, in fact, gotten lucky on these because I got alerted right here, 189. And as I'm placing my sell order, the stock's ripping. So I got an extra amount than I thought I would have. So, I got lucky with that one. But that was my plan. I stuck to my plan, traded my plan. That's it. Price continued to move down. Today, boom, breaks out. Why? Is there any news? I don't know. I didn't really look. Don't really care what the news is, to be honest with you. I don't really look. Well, I mean, I do, but don't really care. Anyways, great move. Markets with NASDAQ was kind of weak today. Great move. Look at the volume. Huge volume. That's awesome. I saw this break out to all-time highs. I think a little bit too late. I wasn't even freaking watching this. You guys, I don't really watch individual stocks too much. I look at individual stocks at the end of my day when I am deciding on index positions. So I'll look at Microsoft, Apple, Nvidia, Google, Amazon, but I usually don't actively trade individual names. Usually, well, they're not the majority part of my portfolio. Is a better way to put it. And typically, I'm looking to trade indexes. So I'm not like clicking through tickers all day. Although I'll look at some, whatever. But regardless, missed this one. And to be fair, I didn't even have a plan to do it, so that would have been off the cusp. Wasn't even really watching it. Got out, kind of forgot about it. I should have. Oh, all right, here. So here's a mistake. Here's something we can learn from. I should have set an alert for new all-time highs, to buy new all-time highs, because I was just in this trade. And the thought crossed my mind of, man, if this thing goes to all-time highs, that would be sweet. And but then I have the thought of Amazon's so weird to trade for me. It just doesn't really suit the eye. Very jagged. Everything's super jagged. Doesn't really fit the eye. Can't really come up with what pattern any of this stuff is. But again, so then I let my bias or my opinion get in the way of a strategy where you have one of the best companies in the world in a clear uptrend breaking out to new highs. I mean, that's automatic buy all the time. That's automatic buy. So that's what I should have done. I should have set an alert. All right, cool. We learned from that one. Let's see. You know what? This could be an ad in the morning. Nope. Here I go again, talking myself out. No, I'm already maxed out on my individual stock positions. That'll start to get too large part of my portfolio, and that's what I don't do. So I'm maxed out. Plus I want to leave some room in there for Goldman Sachs, if that thing, because see, I have starter positions in Palantir and Goldman Sachs and Robinhood that I'm looking to add if those work. And of course, I have plenty of room to add for NASDAQ or Dow. So we'll leave this one be and say this looks freaking great. And that's that. So that was capitulation and elation. And I'm getting tired, and I'm going to do a separate video for the plan for tomorrow. Drink some water and kind of chill out. The plan for the video for the plan for tomorrow, I'm going to add in some more stuff. We're going to go through commodities. We're going to go through sectors. Then we're going to go through indexes and maybe some individual stocks as well. So we'll do a separate video for that one. Alrighty, this one was kind of long-winded, so appreciate it. See you guys.